Hello everybody, welcome to the Daily Horizon View. The date today is the 1st of the 7th, 2019. We are looking at the ASX exchange traded funds, top 5's. Our spotlight today is QAU. That is the BetaShares Gold Bullion ETF, and that one is currency hedged. Hope everybody enjoys. Stick around to the end and we can run over this little interesting ETF. Thanks. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okie dokie, let's bash on into the top 5 percentage rises. Today we saw CNEW, CETF, QR, ETPMPT, and Robo. So CNEW is the VanEck Vectors China New Economy ETF, which tracks the MSCI market Greater China. New Economy Index, relatively small ETF. This one has a market cap of 37 million or thereabouts. So today we saw a rise of 4.58%, which equates to 29 cents on a pretty strong volume. You can see here trading of 52,600 shares. Top 5 percentage falls, we can see HAC, ISO, ZUSD, QOZ I should say, and QDX. So HAC is the BetaShares Global Cybersecurity ETF, sort of a low to mid-range sized ETF. This one has a market cap of $138 million. This one pays a healthy little dividend of 4.37%. We saw a fall today of 6.19%. That's quite substantial. Loss of 52 cents on pretty strong volume actually. So 224,000 shares traded. Very, very strong volume actually for HAC. So people must be getting out because of the feeling against the trade imbalance with America and China, and the fact that that hasn't been sorted out yet anyway, possibly. Top $5 rises, we saw IVV, SPY, IHVV, IJH, and ETPMPT. So IVV is the iShares S&P 500 ETF. And that one seeks results that correspond to the price and year performance of the US large cap stocks. So obviously, as the box says, or the tin says, it tracks the S&P 500 index. Market cap of $3.1 billion. Dividend yield is pretty low on this. You get 1.67%, not even outpacing inflation with your dividend there. Highly rated by Morningstar. It gets a gold rating. So if you're thinking about that in relative terms, it is 5-star rating. So we saw a rise today of 1.88%, which equates to $7.93 on a bit of middling volume here of 17,400 shares traded. So let's have a look at the top $5 falls. We saw IHOO, GDX, ILB, IAF, and GEAR. IHOO is the iShares Global 100 ETF. That's hedged, and that tracks the index, which is composed of 100 largest global companies. That one has a market cap of roughly $43 million, quite a juicy dividend yield here of 7.94%, something worth looking at if you're chasing some dividends and international exposure. Morningstar give this a bronze rating, which equates to a 3 out of 5 stars. So we saw a fall today of $1.42 or 1.34% on reasonable volume for this smallish ETF of 5,100 shares traded. Top 5 number of trades we're looking at today: VAS, VAP, IVV, VTS, and VGS. We saw VAS, is the Vanguard Australia Share Index ETF, quite a popular ETF on the Australian market, and that one tracks the S&P ASX 300, market cap of 3.5 billion. Reasonable dividend here, you'll see 4.45%. Morningstar give this one a bronze, which is a 3 out of 5 stars. We saw today 309 trades. Looks to be on the downside today, so people on the sell side, I should say, because we saw a fall in the share price of 46 cents, or which equates to 0.54%. Moving along now to top 5 for volume, we saw AAA, HACK, NDQ, IOZ, and STW. So AAA is the BetaShares Australia High Interest Cash ETF. This one has deposits accounts in Australian banks such as ANZ, CBA, and NAB. Relatively larger ETF, $1.5 billion thereabouts. This one's been getting quite strong inflows over the last sort of 10 to 12 months. Has become quite popular. We see a dividend yield here of 2.03%. You get a Morningstar rating of neutral, which is effectively 2 out of 5 stars, I think, from memory. So we saw pretty healthy volume here of 292,800 shares traded. Looks to be on the downside predominantly. We saw a 7 cent drop in the share price, which was 0.14%. Let's cast our eye over the top 5 for value. We saw AAA, IVV, VGS, STW, and the VAS. So we won't go too much into AAA again. The value of that trade, so obviously your share price times your volume, that works out to be $14.7 million. So not a small day, but not a massive day either. Moving along. Okay, so let's cast our eye over the spotlight today in its QAU, which is the BetaShares Gold Bullion ETF, currency hedged. We have investment objective is to track the performance of the gold price with a currency hedge against movements in the AU divided by a US dollar exchange rate before all the fees and expenses. Why on earth would you buy it? Why would you consider it? Provides exposure to the performance of the gold bullion price, and it's also backed up by physical gold bullion. Fund hedges its US dollar exposure back to the Australian dollar, providing a pure exposure to the gold price. So there's sort of that fluctuation in the currencies removed. Gold is often viewed as a safe haven in times of volatility and economic uncertainty. Gold can be used as a hedge against potential inflation. So we saw a net asset value of $14.22. We saw a close today just below that of $14.05. So the market cap of this one is roughly $1.5 billion. We can see a sort of, I think it's a little on the expensive side. So the management costs here per annum are 0.59%. Suppose a distribution annually, but there is no distribution on this one because gold don't pay a dividend. So one of the easiest ways for the average investor to buy gold, if that's what you're interested in, is to buy an ETF. So for an example, owning one share of QAU represents one share of the gold stored, like physical gold stored in the bank vault in London. So this ETF is actively hedged, as mentioned before. It gives a pure exposure to the gold price so that you're not exposed to currency. Being currency hedged, like I said, that removes some investment uncertainty. So if you're a newer investor and you don't really want to be involved in the currency side of it, and you just want to remove some of the risks associated with that, this might be an option. So there's a few options for gold ETFs. I'd also have a look at GOLD, which is unhedged, and PM Gold, which is listed on, which is allows you to buy physical gold through the Perth Mint. So that's another interesting one. And MNRS is a gold miners ETF. So we can have a look here. Since inception in May 2011, it hasn't really done much. If anything, you're sort of running backwards on things here. That's sort of on the right-hand side. You can see the graph, the performance graph. Dismal. Me, I don't really like investing in gold. The only reason you have some gold in your portfolio is to protect yourself if there's a massive fall in the market. But gold doesn't produce anything, so you're not getting paid a dividend or anything like that. So for me, it's not really one of those high. It's not high on my list, I should say, for investing or using as an investment tool. But just if you were looking at something like that, you'd only have between 2 and 5% gold in your portfolio overall anyway. So yeah, I definitely always do our research, as mentioned before. So yeah, for me, this wouldn't really rate as part of my investment portfolio. Thanks, guys. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.